Good morning, everybody, and welcome to the National Real Estate Post. Once again, we are here with our friend Barry Habib, who's going to enlighten us as he usually does. But before we get started, Barry, housekeeping. Want to make sure everybody knows about our sponsor, Loan Tech. If you guys are out there wondering how you can get a bunch of millennials maybe to start coming into your world, you know they do everything online. You got to have a great online pricing engine that's completely accurate. These guys help you with that. Not only that, once you get the leads in, help you manage them from the lead generation part all the way to the close. An amazing product, extremely inexpensive. Click the banner you see down here. Over on your right, we've got a recorded webinar where we go into everything in detail about them. And if you want to hit them up for more information, you can do it from there. But it's really cool, and you got to check it out.
Love Loan Tech.
Yeah, they're great, man. They're super good guys and just a great company. So before we get started, let's just touch base on, like we typically do, Barry, your prognostication once again has been, just about flawless. You've pretty much nailed everything. You nailed the 10-year. You said you thought it was going to wind up, and that's exactly where we were at about, 1.5, something like that. And then
dipped down to there.
Yeah, it got down. You nailed that. You nailed what you saw coming with the stock market with relation to oil and that types of thing. You're nailing it as usual. So we wanted to get you on today and see what else we got cooking. I know we got the Feds coming up. So, I think everybody's kind of interested. What do you think is going to happen? So what's your thoughts on the Fed? And then we'll kind of go from there.
Well, first of all, thanks for the kind words. It's nice to have been fortunate in that. We'll take a shot and see where we go from here. Nobody gets it right all the time, but thank you. And your kindness makes you even more handsome than you already are to me. So,
it's a curse. It's a curse, but I've learned to live with it.
You got it going on, my man. So, hey, we do have the Fed coming up tomorrow, actually.
Yeah.
And it's something that it's a big deal because the Fed's not going to hike rates. But here's the thing. What will the Fed do with respect to their statement? Because they're in a tough position. You've got other central banks in Europe, in Canada, in Asia, as well as other parts of the world that have gone either to negative interest rates or that are doing more quantitative easing. So they're weakening their currency against the dollar. And if the Fed hikes, see what happens is our currency gets stronger. And what that would do is it would make it more difficult to sell our products abroad because then they become more expensive.
Gotcha.
In addition to that, the profits that you make when you come to bring them back to the United States, they're now at an exchange rate that makes those dollars less valuable.
Gotcha.
So you lose money both ways, and that's not the greatest thing for our economy. So you really have to balance that out. But the Fed does want to try and see if they can hike rates, and that's because of two important things. One is employment numbers. Now, look, we can go deeper and we can nitpick them a little bit, certainly, and maybe it's more than nitpicking, okay? A lot of people have concerns about the employment numbers, and I could see that. But the headline numbers are pretty strong. Comfortably over 200,000 jobs, 4.9% unemployment rate. Yes, the participation rate stinks, absolutely correct. But they have improved a lot, and when you look at last week's initial jobless claims number, 259,000, that's a 5-month low. So a lot of good things on employment. The Fed also looks at inflation. And the inflation numbers have been creeping higher. 2.2% on CPI, 1.7% on the stupid PCE number that they look at that doesn't include housing expense or out-of-pocket medical. So inflation, that PCE has doubled recently.
Gotcha.
So the Fed's got to be saying, hey, man, we can't let inflation get out of the bottle here.
So they're really in kind of a really quirky spot right now then.
Exactly right. It's exactly right. So that's why the statement's going to be so tough, because if they start to try and walk a tightrope, and if they say some things that roils the markets, here's what we have to look for. If stocks don't like it, then we'll see a benefit in mortgage bonds.
Right.
And remember, as we said in the past, when the Fed hikes rates like they did on December 16th, it's usually bad for stocks like it was and good for mortgage rates. I know it's kind of counterintuitive, but we know that to be the case. Now, if the Fed comes out and they kind of just talk about inflation being a concern, well, mortgage bonds aren't going to like that either. So we're kind of in a little bit of a tricky place. My bottom line on this is I think stocks have been on a big run. They're due for a bit of a breather. And a lot of that is correlated to oil. So oil and stocks, believe it or not, have a 95% correlation. So we're seeing the oil markets reach much higher levels than where they were just a couple of months ago. I think that they're kind of due for a breather. I think the stock market's due for a breather, and I think that means that we could see some better interest rates ahead. Now, look, this is a tough call, okay?
It's a tough one.
I don't know what the Fed's going to say, but I think that we're kind of set up for that type of a situation.
Just would you, going into this, since it's just such a tough call, I mean, it's a really tough call, but something's going to happen because they're going to say something. Would you be more inclined right now just to kind of say, hey, maybe lock things up just to get through tomorrow and see what happens? Or where are you at?
I'd advise floating. I'd advise floating for a couple of reasons. And the reasons are, is because I do think that rates are due for an improvement. Now, look, I hope the next time I come on, we get this one right.
Yeah.
But I hope so. But here's the nice thing about it. 2 p.m. Eastern time is the Fed's decision. So we will have the ability, if the Fed comes out and does something that spooks the markets, to take action and lock in before we see it.
Okay.
So that's why I would say, I think at this point in time, we need to be in a position of floating. And it was a good day in the market yesterday, so I think that would be in good shape.
Well, I'll take the time, and of course, this is just an unsolicited plug, but I mean, just another reason to be connected to MBS Highway, because we get through this. If you do have to do something quickly, you'll be notified if you're a member, and you can take action, quickly. So
getting even more handsome as we speak.
Okay.
No, but really, if you think about it, what we try to do is we really try to help increase your batting average and give you information so that when you're talking to customers, it's important. You got to beat your competition.
Sure, man.
And increase your batting average means every conversation, how many of those you converting to transactions. I think we help you convert more.
Hey, man, if I was a consumer and the guy called me and said, hey, man, this is just what happened, I think you should pull the trigger on your lock right now, I'd be happy. You know what I mean? And at least it was from an educated stance. You know what I mean? Oh, that's what happened? Yes. Let's lock. We're running a little short on time here, but real quickly, housing market, how are we looking there strength-wise?
I love the housing market. Now, look, we know it's local, but I think on an overall level, low inventory levels, we're not seeing oversupply of homes being built. It's a formula for very strong housing going forward. The demographics are great. We see the millennials, as you mentioned earlier, they're at the cusp of a large birth rate increase that will result in 33-year-old millennial crops increasing, and that's your typical average first-time home buyer.
Yeah.
To me, this is a terrific marketplace. We now have the amount of homes that are distressed or in foreclosure at exceptionally low levels.
Right.
That sucks out some of the inventory.
Right.
This is a really good market. It's a good time to be a buyer. Don't listen to some of these folks like the Diana Oliks or whatnot on CNBC who are so darn negative on housing.
Right.
For 4.5 years, if people would have listened to these type of remarks, they would have been on the sidelines.
Right.
Missing 40% increase in real estate. There's a lot more to go.
Okay, great. Well, with that, we'll sign off. Really appreciate all your insights. Guys, don't forget you can get a 7-day free trial, MBS Highway. I'll put a link. 14 days. I'll put a link down below or up above. Somewhere where you're watching us, no matter where it is, there'll be a link to MBS Highway's trial there. Barry, always a great pleasure. Thank you so much, and we'll have you back again real soon.
Thanks, guys. Hope everybody out there has a wonderful day.
All right,
Bye.
see you, buddy.